to pay attention. You know, when you pay attention to the right skill set, the right strategies, the right things to look for, you know, trading isn't something that from my experience of what I've seen myself and other people, it's not something you force. You kind of learn how to have the trades come to you. And right now there are a lot of trades going out, and there are not a lot of people who know how to catch them. So we wanted to get you guys on here. I'm assuming a lot of you are complete beginners. You know, there's 40 million people recently unemployed due to coronavirus. So we want to assume everyone is pretty much brand new. And we want to take you guys in, and, you know, I want to have Mo, is one of our top leaders and top Forex traders and founders legacy. I'll give you guys a little intro to Forex, help understand just how you guys can capitalize on the rest of this week, the rest of this month, and the rest of this year in the markets with us. So I'll unmute you, Mo, and take it away, man.
All right, let's roll this. I'm excited, guys. Thank you so much for having me again. Just a little bit about myself, guys. I've been actually trading. Well, I'm 24 years old. I've been trading for about 4 years. I started when I was 20. I was working at a full-time job, and this is when I got introduced to Forex. And it's crazy because it's been a hell of a ride for me, because the first 2 years, it was just, I would say, an up and down journey, because I was just learning from my mistakes, learning how to profit the correct way, following rules, following a system. Because the problem is that when you start trading in the beginning, you're just lost everywhere. And now you're just in a rush to make money. You just want to make money so fast, then you lose focus in a system, in a goal that you have every single day, because you're only driven by money. That's the problem. We're only driven by money. Greed is going to affect you a lot. And then you're going to actually end up losing a lot in the markets. And that's why a lot of people blowing too many accounts, guys, because of greed, because it's all mentally. Forex is literally 80% mental and 20% skill. Because if you're very good at setting goals and setting a system for you to become disciplined, then you can actually succeed big in the foreign exchange market. But yeah, it's been 4 years. I've been trading full time actually for about 2 years from my home. Got my little my setup going. And of course, trading 24/7 because I'm always home. So if you ask me, how's my quarantine going? I've been in quarantine for about 2 years now. So it's going good. But yeah, that's how we're rolling right now. So I really want to start this. I want to show you guys some basics. I'm actually going to bring Christine up in a little bit right now, but we're going to go over some basics. Folks, what is a pip? What is a lot size, trends, support or resistance, time frames, just a little bit, you know, basics to explain exactly how to get started in the Forex market, to understand all that basic structure. And then at the end, I'm actually going to come back on the call and I'm going to show you guys a little bit of I did some back testing, but I'm going to show you guys how to exactly place some support and resistance and do some technical analysis to predict bigger moves, even 20, 100 to 200 pips, even more than that. So very simple technical analysis I'm going to go over at the end of this call, but I really want to take care of the basics first, and then we can move on to that side as well. Okay, so Christine, if you're on, I'm gonna introduce you guys to Christine. She's actually my business partner. We've been trading together for about 4 years as now. She's a beast in stocks. She's been trading stocks for a while as now, but she does Forex, penny stocks, everything. So Christine, you have the floor and you can share your screen for the presentation when you can.
Okay, I was gonna say I'm muted. Okay, guys, give me a second. I'm gonna share my screen, but as I'm sharing my screen, just so that I can, I'm not a stranger to all of you guys. Me and Mo actually have been a partner in trading for a while. Before I met Mo, I was trading the stock market, and then around the time that I got into the foreign exchange market, which by the way is very similar to the stock market, if you're using technical analysis, no matter what market you go to, you can take this anywhere and actually use this to your advantage. So as traders, first off, all we're doing really is taking patterns from the past, correlating them with patterns in the present in order to predict what's happening next in the market. And the better you become at reading patterns, the more profitable you are as a trader. And that's pretty much what the game is, learning to read patterns, using them to your advantage in order to make money in the markets. It's not guessing, so it's not a gamble unless you don't know what you're doing. And that's what we want to break, that barrier, so that it's not a gamble. So you guys will let me know if you can see my screen. Hold on, I'm not seeing
Just before she gets started, guys, drop a 777 if you're excited to be here and learn from us today. Drop a 77 real quick. Let's go. Let's get this chat rolling. Let's get this excited. I'm excited, guys. Let's go. Let's catch some pips this week.
Hey, we broke 40 people. It's a pleasure to have you on, Christine.
Hell yeah.
Thank you. Thank you. I'm happy to be here. Now, I'm not sure if you guys can see me. Hold on, share screen. Oh, it's not allowing me to share screen. That's what it is. It says host disabled participant screen. Okay.
Did Darren
Try
let
now.
you? Okay, now you.
Let me see. Let me try now. Okay, now it's allowing me. There you go. All right, guys. Let me know if you guys can see my screen. Drop a 1 if you can. It should say Forex Basics. Okay, good. Let me open this up. All right. Okay, guys, so just so that you know what we're going to go over, we are going to go over market zones, what are pips, what are lot sizes, what are pending orders, what are bearish and bullish trends, what are time charts, what are candlesticks, how to read them, and stay to the end because we have our bonus. We have more mode that's going to be explaining the markets in live time and showing you guys how you guys can take advantage of everything that we're about to teach you right now. Now, do understand that we are going to run through this a little bit fast, but hopefully later on we'll get to break this down a little bit more. I don't know what the team has planned for you guys, but hopefully we will be able to revisit everything that we're showing you now in more breakdown details of everything. Okay, so don't feel overwhelmed if you don't understand everything right away. After all, it does take years to master this. We're just going to do our best to show everything in a nutshell. Okay. All right, guys. So first thing we're going to talk about is our time zones. Now there are 4 different types of time zones, and they're based on how the market circulates, because this is a worldwide market. Foreign exchange includes the entire world. While we are sleeping, another side of the country is awake, and that is the reason why it's a 24-hour market. So we have the Sydney market, which is at 5 p.m. Eastern Standard Time is when they open, and then they go into the next day, 2 a.m. Eastern Standard Time. The Tokyo market, we're looking at 7 p.m. Eastern Standard Time into the next day, 4 a.m. Eastern Standard Time. The London market, 3 a.m. Eastern Standard Time until 12 p.m. Eastern Standard Time. And then the New York market, which is the American market, is 8 a.m. Eastern Standard Time all the way to 5 p.m. Eastern Standard Time. Market is open 5 days a week, and it's pretty much 24 hours for those 5 days a week. We start on Sunday and we end on Friday. All right. The first thing we're going to talk about are pips, because we always hear, oh, let's catch those pips, guys. Let's catch those pips. Making money, right? PIP stands for price interest point. It is equivalent to point movement within the market. So it can show you basically how many points a currency is going up or down. And when we are considering pips, we can think of it as a game. When you gain a point, you gain money, or when you lose a point, you lose money. Now we'll go further into that. I'm going to compare it into the stock market, because a lot of us have heard of the stock market, and some of us are just now hearing about Forex. Probably some of us have already known about Forex, but for those of us who don't, I guess it's a good comparison. A stock like Google, for example, whenever it moves up a point, we consider that it's moving up $1. Now, in Forex is very powerful because it's very volatile. And if you were to compare the two, meaning let's say a stock like Google or currency like Euro USD, you're gonna notice that on average, a stock like Google will move like about 10 points per day. Currencies move a little bit more than stocks. So because they're so volatile, and I'm gonna break this down so that you can see the difference. When a stock like Google moves 10 points, that's considered $10. when a currency like Euro USD, which by the way can move anywhere from 100 to 1,000 points in a day, which is powerful, it can be equal to $100, $1,000, or even $10,000 depending on your lot sizes, which we're going to explain as well. Like you can put those two together. Now, how do we find the point? You'll notice that if you're looking at trade setups, or if you're looking at or let's say when we call trades, for example, okay, you'll see numbers and they'll look like this. They'll be usually about 5 digits, 4 to 5 digits, like 1.23748. And in order to read those numbers, you would be using the 4th digit after the decimal. In this example, 1.23748, 4, the number 4, is the 4th digit after the decimal. Now, how do we find the difference in pips and our currencies? Here's an example using GBP USD. In a price where, let's say you enter the market at 1.23728, and let's say you exit the market at 1.23798, in order to find the pip difference, you would minus the two numbers and you literally go to the 4th digit after the number. Now, you guys can also use your calculator. You don't have to be a math whiz, but if I were to minus the two numbers, it would give me the number 7. Basically, it would be a 0.0007. I will be using the 4th number after the decimal in order to find the number 7 in this example, okay? Now this changes when we're looking at JPY pairs. With JPY pairs, you're looking at 3 digits before the a number. It could be anywhere from 3 to 2 digits before the number and 3 digits after the number, okay? But in order to read the pip, you're starting from the 2nd number after the decimal. In the example here below where it says 111.238, your pip is the 2nd number after the decimal, which is the number 3, as you can see in this example. That works also the same for commodities like oil, silver, or even gold. Now let's do a pop quiz about what we just learned. And I'm gonna ask for a lot of audience participation. So in your group chat, you're basically gonna answer whatever questions I'm asking based on what I just taught you guys, okay? This should help you guys catch it very well. Let me move this a little bit. Give me a second. I don't know if you guys see this, but the picture that I have on the side is an example of a trade that we called out in one of our chats, okay? You'll see it says sell Euro USD, and it gives you the number at where to sell, and it gives you the stop loss and the take profit. Now, using that example, I went ahead and I wrote everything out for you guys. We're looking at the number 1.168 and the take profit 1.1600, okay? What I want you guys to do is find how many pips are there between the two price points in the following example. The way you do that, again, going back to what I taught, you minus the two numbers, 1.618 and then 1.1600. I'm gonna give you guys time to calculate this. Go ahead and put your answers in your chat. Okay, I think I got enough answers here. All right, guys. So if you got the number 80, you are correct. If you did not, it's okay. We'll explain why that is. When we minus the two numbers on a calculator, it'll show 0.0080. If you go to the 4th number after the decimal and start reading, you'll see the number 0, but right next to it, you'll see 8, which is 80. Get the gist? Okay, so let's look at another thing. Now we're gonna because we want to save a little bit of time. I'm not gonna give another example, but you can always go back and just relook at whatever I just now taught. Now what we're gonna do is apply lot sizes. First off, what are lot sizes? Your lot sizes are gonna show you how much is being made per pip. We already broke down what a pip is. However, the value of a pip is based on the lot size that you choose. the amount you are gaining, it lets you know the amount that you're gaining for each pip. And it also vice versa, it can show you the amount that you're losing for each pip if it goes the opposite way of what you expected. There are 3 different types of lot sizes. The smallest is our micro lots. Then we have our mini lots, and then the largest is our standard lots. Here's an example of what it would look like. The picture that you see to the side, this is what it would look like on your phone. If you were to trade it directly from your phone and open up MT4 platform, on the top of your trade, as you're placing your trade, you're gonna see those numbers on the top that looks similar to this. That's where you change your lot size. It allows you to change how much risk is being used in the trade. With our micro lots, you have 0.01. Our mini lots, you have 0.10. Our standard lots, you have 1.00. Now, micro lots will consist of 0.0 all the way to 0.09. Our mini lots will consist of 1 or 0.10 all the way to 0.90. Once it goes to 1.00, we're entering our standard lots, which can go all the way up into infinity. Yes, there are traders who even traded with like over 100 standards, by the way.
Big boy lots.
Yes, big boy lots. We're talking about hundreds and millions of dollars that you're trading in the market. Now, each lot size will give you a certain amount of money per pip. For example, our micro lot, we're looking at 10 cents per pip. That goes for the same when we're looking at a 0.02 lot size, which would be 20 pips, 0.03 lot size, which would be 30 pips, so on and so forth. Mini lots, we're looking at $1 per pip. That goes the same for our 0.20 lot, which would be $2 per pip. 0.30 lot, $3 per pip, so on and so forth. Next one, we got the standard lots. One standard would be equivalent to $10 per pips. 2 would be $20 per pip. 3 would be $3 per pip. 4, $4 per pip, so on and so forth. And like I said, it goes into infinity. So if we do 100 standards, you're looking at about $1,000 per pip, about within that range. Okay. So basically, this is what you're looking at. These are the numbers, and this is the price, the amount of money that you are making for using those types of lot sizes, and you can apply them to whatever trades you have. So as the market moves up and down, now you apply that to the pip, you know whether you're gaining this much money or losing that much money. So pop quiz. Let's put our lot sizes to work. So now I want you to associate the pip gain by using our lot sizes. Here's an example of another trade that we have on Telegram. This is a gold trade. So with this one, our entry is 0.73447. And our exit, or our take profit, is 0.73000. What I want you to do is first find the difference, the pip difference. Then we're gonna associate a lot size, the mini lot size, to that pip difference. Keep in mind, if we go back, our mini lot is a 0.10, which is $1 per pip. $1 is the value that you're gaining per pip. So if you're not gaining $1 per pip using a mini lot, what are you going to make through this trade? Go for it. Calculate it. Use your calculators. You don't have to get this off the top of your head. And then we'll look at what answers you guys have. I'll give you guys some time to calculate this real quick.
Answers are looking good.
All right, guys. You guys are very smart. You're sharp. Quick learners. Okay, so let's get into this. If your answer is $44.07, if you round it up, $45, then you are correct. I'll take any one of those answers. This is how you find your answer. So you minus the 2 price points, which is your entry and your exit, your 0.7344, sorry for that typo, but it's 0.7344, minus 0.7300, okay? That'll give you $44.07. How would it look like in the calculator? 0.00447, and you're going to the fourth digit, after the decimal, which is the 4. Look to the side, you have the other 4, 44.7 cents, 0.70 cents. And that is your answer. All right. Now, we're gonna go a step further. Hold on, let me go back. So we're gonna go a step further. You guys didn't really look at the answers that I had, but now we're gonna apply our micro lots and our standard lots. Remember, keep in mind, our standard lot is $10 and our micro lot is 10 cents. I want you to use the same example that we used here and give me all three, your micro, mini, and standard. You already got one part out of the way, which is the mini lot. I'm getting you guys to do this real quick.
Let's see the answers. Let's go. Let's go.
And plus, I was on the side that had the answers, so.
Yeah, you kind of blew it off. You showed
Yeah.
it.
I don't know if you guys actually saw that, but. All right. So I'm gonna move to the next slide. These are our answers. With our micro lot, we have $4.47. Our mini lot, like we said before, $44.70. Standard lot, $447. So if you were to take that trade and you were to apply any of those lot prices, this is the amount of money that you're making. For a micro lot, you're making $447. For a mini lot, $44.70. And if you did a standard lot, you're looking at $447. Now imagine if you were to use a 10 standard or a 2 standard or however other amount of standards that you decide to use. That would equate the amount of money that you could make. And that is simply by changing your lot sizes. You're doing the same trade, but changing your lot size. That's all you're doing. Now, we're gonna talk about pending orders. These are different order types. All of us already know about our buys and our sells. However, for those of us who don't know about the pending orders, these are orders that basically you're placing with the intention of them activating later. We have buy stop, sell stop, and our buy limits and our sell limit. I'll explain what each is. Now here's an example of what that would look like. You can find this, by the way, on Google Pips. Just write down pending orders and you'll find different picture examples, some that look like this. But you can print this out, put this on your wall just so that you remember. So our buy stop, first off, you see the blue line, that is considered our entry. The arrow is just showing you where price is going. With a buy stop, you're expecting price to go up. With a sell stop, you're expecting price to go down. Same thing for our buy limits, same thing for our sell limits. The only difference is that with our buy stop, price starts below our entry, which is the blue line, and you're expecting it to go through your entry and continue up. With the sell stop, it's the opposite. Price starts above our entry, which is the blue line, and you're expecting price to go down through our entry and continue going down so that you can make money on the way down. Cool thing about Forex, make money on sales and buys. Buy limits, you're looking at price. Hold on, let me move this out of my way. Got the chat thing in my way. So you're looking at price going down. Our entry is the blue line. You're expecting price to, that right now at the moment price is above our entry. You're expecting price to go down, hit your entry, and then continue the opposite way up towards a buy so that you can make money on the way up. For a sell limit, it's different. You're expecting price to go, which price at the moment is below your entry. You're expecting it to go up, hit your entry, and then continue down so that you can make money on the way down. If you're correct, you make money. If you are not correct, then you can lose money. Next thing. Now we have our uptrends and our downtrends. First off, our uptrends and our downtrends, knowing the direction that the market is going going to allow you to decide whether it makes sense for you to buy in the market or to sell in the market. If you understand when to buy and when to sell, then you're for the most part going to be right most of the time. And if you're right most of the time, what does that mean? You make money. So our first example is our bullish trend, which is an uptrending market with higher highs and higher lows. And then our next example is our bearish trend, which is a downtrending market with lower highs and lower lows. Notice, just so that you guys can remember this, it looks like an upward staircase. Price starts our low here, and then it goes up to make our high, then it goes down to do our swing low, high, low, high, higher highs, higher lows, higher low, highs, higher lows. And it keeps on going in that pattern. That's like an upward staircase. With the bearish downtrend, it's the opposite. You're seeing it start from the top, go down, then makes a higher, a lower high, down to make a lower low, lower high, lower low, lower high. And it keeps on going down like a downward staircase. Now, pop quiz. We just looked at this. Let me know what you guys think this is. What type of trend is this? Go ahead and type in your chat. Okay, if you guys said this is a downtrend, sorry, or a bearish market, or a bearish trend, sorry, then you are correct. We have our high, our low, our lower high, lower low, lower high, lower low. Next one, what type of trend is this? Okay, now this is an uptrend or a bullish trend, which means we got our low, our high, our higher low, higher high, higher low, higher high, higher low, upward staircase. All right, guys, let's move on to the next thing. So now we're gonna put everything together. We talked about our trends. We talked about our, we talked about the pips and the lot sizes. Now we're gonna actually look at what a chart looks like. This is an example of an MT4 chart. On the top, you will see time frames. Those time frames can be changed. The M1 stands for 1 minute, 5 minutes, then we have the 15 minute, 30 minutes. H1 stands for hour, 1 hour. We have the 4 hour day, D stands for day, sorry. We have the daily and we have the weekly, then we have the monthly. Why is any of this important? So, first off, if you look at the graph, you're gonna notice the blue and green little things right there, that's candlesticks. Those candlesticks actually are represented by the amount of time that we've chosen to look at. So for example, if we chose a 1 minute chart, then that means that each candle will represent 1 minute. It means that basically it takes 1 minute for each candle to form. After 1 minute, a new candle will form, as you can see here. If we were to do a 4 hour chart, that means that every one of those candles represent 4 hours. After every 4 hours, a new candle forms. So if you put this together, this is basically telling you, okay, at one point price was here, and then price might have moved to a different point. But as the candle grows and shrinks, it all represents the amount of time that it took for that candle to form. All that translates to us being able to take that information and predict, okay, what pattern is going on? What do we expect to happen next? And we'll go right into that. So as you guys also put this together, and as you guys use the different time frames, first off, why are we even changing time frames? It allows you to analyze the chart and be able to look outwards and inwards of what's going on with price movement. For example, if you were to look at your bigger time frames, which would be your 1 hour, 4 hour, your daily, weekly, and moving up from there, these are usually to see the uptrends or the downtrends of the markets, to see the bigger picture of market and realize where price is, direction that price is going overall. The smaller time frames let us see the details. They're really good for entry points. We have our minute and our 5 minutes and our 15 minutes. It allows us to see where is the best place for us to enter the market based on their lower time frames and what the price is currently doing as opposed to what price has already done in the past. So we put all of that together, and like I said in the beginning, we're able to take the past and correlate it with the present in order to predict the future. Now, let's not get too overwhelmed, but just to give you an example, this is an example of gold, and this is the daily chart. Notice what it looks like on our right side and also our left side. The left side is basically just the same exact time frame as the right side. I just decided to zoom in so that you guys can see what it looks like on an actual graph. This is my phone. This is literally on the phone. On the actual graph, if you zoom in, you see the candlesticks, our green and red candlesticks. All of these took 1 day to form. As the day passes, a new candle will form. You lower the time frame, then it changes. Now I'm going to give you the same pair, our gold, except I'm going to put it on a lower time frame. It looks a little bit different, right? Now we're zooming in more to the details. Our lower time frames, I'm able to take certain points on this graph, if you look to the right example, and decide when I can enter the market. This is what we're going to teach you, or what you guys will learn as you start to practice this little by little. You're not going to learn this all today, but this is just an example of what you can expect. And we're going to break it down to make it easier for you to understand this. Like that, it's not Chinese. Now I'm going to give you a small summary of how to read the candles, and then we're going to move into support and resistance because I don't want to waste too much time. But this is basically what a candle looks like. We have our bearish and our bullish candle, the bullish to the left and the bearish to the right, which is represented in the as a green for bullish. This usually represents the buyers. The bottom is where it opens, and then it closes on the top. The bottom to the top, where we say open to close, is considered our body. And then above that and below that, we have our wicks. We have our low wick, and then we have our high wick. At some point, price started here, which is at the open. And then at some point, it went very low to where you see the wick. And then it might have traveled all the way high to where you see your higher wick. And then it closed eventually there. This is basically the story that price is giving us with just this one candle. Put all of these candles together, you don't just have a word, now you have a full sentence in order to predict what's happening next. Moving on. Furthermore, you can use the candles, and as you start to recognize different things that the candles are doing, you can actually use that to predict what price is doing. In this example, this is considered a bearish or a bullish, engulfing candle. The candle on the, if you see where I have that little shadow circled right there, the blue candle that's bigger than the candle next to it, the red candle, it's bigger, which is considered an engulfing candle, eating up this candle next to it. That lets us know that what was originally a downtrend is now changing into an uptrend. Poof. You see something like that, that means that it's a possibility the trend is changing. This is one way that we predict the markets. Don't try to memorize this right now, guys. This is just to give you an idea of how we're able to predict what's going to happen next. Simple patterns like this allows us to predict and confirm what's happening next in the market so that we can make money. If you're right all the time, then you're making a lot of money from understanding all of this, okay? And you don't have to memorize it. You master one small thing and keep on using it over and over again, because you don't even have to learn or know everything to do well with this. Just know know the simple things that actually work for you, and you're going to discover that the more you start to trade for yourself. This is an example of the opposite, which is a bearish engulfing candle, where I have it highlighted. The bigger candle, which is the red candle, is eating up the blue candle. By the way, the blue is the same as what would be a green candle, which lets us know that the market is changing. It's no longer being an uptrend, it changed to a downtrend. And if you look at this example, boom, we have our downtrend, the market's trending now. And that right there was our confirmation that that was going to happen. Now we knew that we're not buying anymore, now we're selling. Now, this is another example of different candles. I'm not going to go through all of them. Just understand that there are so many different patterns or different types of candle that let you know trends are changing, or that you should look at a different direction other than buying or other than selling, depending on what it is. This is another example. These are dojis and decision candles. Don't worry about memorizing all this, but that is everything in a nutshell. So now everything that I just taught you are examples of technical analysis. Technical analysis basically allows you to read the market, read price movements, and read patterns in order to see what the future what future movements are going to happen in the market, as I explained in the very beginning of this slide. as you put all those patterns together, those patterns are forming what we would call areas of support and resistance. What is one way to explain support or explain resistance? Well, support is our floor. Resistance is considered our ceiling. If you look at the example or the picture to the right, you'll notice that I have a line drawn in the middle, and that's, by the way, an uptrend, where we have our high, our low, our higher high, higher low, higher high, higher low. Every point where you see the red, where and I wrote basically resistance, that basically shows us the ceiling of where price will go to before it changes direction. Support does the opposite. It shows us the floor of where price goes to before it changes direction. When you recognize support and resistance, you're going to be able to know, okay, price has just now reached a resistance, which means what? Price is going to do the opposite of what it's doing now, and it's going to start going down. Oh, price has reached support. It's going to do the opposite of what it was doing, and now it's going to go up, down, up. Get the pattern, get the gist. That's basically what you're using support and resistance to predict. It's another way of basically predicting price movement. Now, I'm going to see if I could break something down really quick. Let me do a quick annotation, and then I'm going to have Mo actually show you on live charts what this looks like and how you can use that for finding trades. Will this let me? Yes, it will. Okay. I'm going to draw on this really quickly.
Yeah, you can do it.
Okay, I got it. So look at this. Now I'm going to do it again. And look at that. When we draw on our charts, or when we chart out price movement, this is basically what we're looking for. We're looking for points where price usually meets several times and tends to react. Every time price reaches the ceiling, it reacts and goes the opposite way. Every time price reaches the floor, it reacts and goes the opposite way. And it keeps on doing that over and over again. This doesn't just happen on an uptrend or a downtrend, but this also happens sideways. For example, let me see, this is not the best example, but let me see if I can, there you go. Okay, here's an example. I drew this line to basically show a point, but basically what I would be doing is finding areas sideways where price is probably meeting up. If this was an actual graph and you saw the price movement from the past, what you will notice is that each of those points are points that even in the past, price tends to touch and respect. Touch and respect in the sense that it'll touch it and reverse, touch it and reverse. Can you guys stop writing on my screen? Thank you.
You want me to explain that in the charts, Christine, so it can be more clear?
Yeah, I'm gonna have you explain that in the chart, actually. But all in all, guys, this is an example of what support and resistance more or less looks like. And this is what we use in order to actually predict where price may decide to go. So I'm gonna have Mo share his screen and show you guys on an actual chart what that looks like with candlesticks instead.
Perfect. Thank you so much, Christine. That was amazing. I hope you guys learned from this whole PowerPoint that we just set up for you guys. Christine is the best educator out there. She's the best coach. She teaches really good basics. I hope you guys even understood this, because this is so simplified. Even a little baby can understand all this type of stuff. So that's why we made it so clear for you guys to understand. But right now, I'm about to show you guys live examples in the live market. I'm going to share my screen. And if my boy Darren is on the call, he can, oh yeah, Christine, you're the host. Can you make me the host, please?
Oh, yes, most definitely. Thank you, Mo, for the intro and everything. How did I make you a host?
Just click on my name or like make me host, yeah.
Yeah, you hover over his video and press the little buttons.
I got it.
You got it?
All right,
All right,
guys.
cool. Got it, guys. All right, let's roll this. So this is one of my favorite pairs, guys. GPB, JPY. I love this pair. I love this pair. I just trade it all the time. Of course, here's the thing with GPB, JPY, and a lot of people, I think they know that this is a back and forth relationship. That's why I'm single, because I don't like to deal with other stuff since I have GPB, JPY in my life, because it tends to actually pull back and or like extend to a level that it will fake you out so much and you will freak out in the markets and they will end up going your way. That's the problem with GPB pairs. They tend to pull back in a massive way where it can fake you out and literally trick you in a lot of things to do. A lot of emotions gonna start running in your life, and basically that's where you're actually gonna exit the market with a loss, or move your stop loss, move your take profit. You're gonna do a lot of crazy stuff, okay? So what I'm about to show you guys right now is an example of the trend line that Christine was talking about, and the support and resistance, and how I place my support and resistance, okay? So the first thing I do, guys, remember, technical analysis is part of the game. It's 20% part of the game. Remember, the most important thing right now is to look at the fundamentals, because the fundamentals, guys, everything that happens in Forex, all the movement that you guys see is happening from the outside world. All the government, whatever's happening with the pandemic, all that stuff will affect the market. So if you're actually on top of what's going on in the news, then your market is going to be so easy to look at. All you got to do is place your 20% technical analysis to actually predict what's going to happen, because fundamental is the number one guarantee, or I would say the number one tool to use to predict the market. That's what we go for. Everything moves based on this whole crazy ass world that we're in. Sorry for my language. But so let's move on in GPB, JPY, guys. So right now I'm going to show you guys a simple trend that we just talked about, which is right here. Okay, so now we do have, I'm gonna go actually start from the day. I'm gonna show you guys this trend, and then I'm gonna move on the daily where I place my support or resistance first. So this is a simple trend. Okay, so we got a higher high, a higher low, a higher high, and a higher low, right? So this is a bullish market. All we're looking for right now is to actually buy, not sell. If you are selling in a bullish trend, then you're crazy. You're just going against the whole world, right? So you need to follow the trend. The trend is your friend, guys. If you follow the trend, it's going to give you so much opportunity, so many pips to catch. All you got to do is just wait for the right opportunity to jump in and be patient. Patient is the number one key for it. If you're patient, then a lot of money is going to come your way for sure. Okay, so let's move on the daily real quick. I'm going to get back to this real quick. So on the daily, this is where I place my support or resistance. And the way I place my support or resistance, of course, based on areas in the market where it basically touched, it created a wick or whatever, and it fell back and it went the other way. So the first one I have is this area where it wicked at the bottom. I start from the bottom and go up, where it doesn't have to be where the market where the market is right now. But if you want to do it, you can start from here as well. So you can look at the market at the back in the history, and then you can see actually why this area is a very good resistance line, and why it actually retraced from this point because of what happened exactly here. You see, all this consolidation is affecting the current market right now, and this is the reason why it dropped as soon as it touched this level. If you are not on mute, please mute your microphone. Thank you so much. So the second thing, what I'm gonna do is actually place my support right here. So we got a floor, we got a ceiling, right? That's perfect. So now I'm gonna move on and actually place another support area right here and another support area right here. The reason why I placed this, because look at this point right here. So I'm gonna show you guys why. Because we got a couple wicks, couple of consolidation, couple of price action around this point, that actually the reason why the market went up and went to this area and then it pulled back and respected it because of previous price history, right? So that's why this is our floor now. And then now the market start consolidating and actually ranging. This is what Christine was talking about, ranging market, which is basically right here, where the market is in just a small rectangle, is just ranging until it breaks and then it drops, okay? So that's basically how I place my support and resistance. And of course, when you go to lower time frames, you guys will see more areas of support and resistance. So now let's move on to the 4 hour. And the best thing about the 4 hour, this is my best time frame to actually look at patterns, and I enter on the 1 hour since I'm a day trader. There's a day trader, there's a scalper, and there's a swing trader. I'm a day trader. My trade is gonna be, if I enter a trade, I'll be in it today, maybe tomorrow, at most maybe 3 days, okay, if it's a day trader. You have a week basically, but if you're actually a swing trader, people are in the markets catching thousands of pips because they're just swinging. They have a small lot size and they're just letting the market ride the whole wave, and then they're taking the whole cake with them, okay? But if you're a scalper, you're that type of sneaky guy that will sneak in, you know, punch in the market real quick, 5 pips, 6 pips in and out, and then get out using the lower time frames, which is 15-minute and maybe, you know, lower time frames as well, like the 1 minute, okay? So check this out, guys. So right now, I'm gonna ask you guys a question. So since we have this trend going on, which is the buy trend, right? And then we do have actually a ranging market around this area. So I'm gonna actually create my support over here. So now we do have a support level. We do have another support level, right? So check this out. Can anybody tell me, okay, what happens if the market actually, let's say, breaks to this lowest point, like it breaks that support? What's gonna happen if it breaks that support? Tell me. What happens if the market keeps selling and it breaks this support? What are we gonna look for? Retest, okay. Retest to resistance, which is, well, support before and now it's basically resistance, right? So perfect, yeah. All right, so if the market breaks this level, guys, which I'm gonna show you guys, I'm gonna predict the market for you guys and you guys tell me if it's gonna be right. So let's say if the market breaks, I need to wait for a retest to happen. But if the market respects, so if this 4 hour candle closes above this support line, then all we need to wait actually for is a very solid confirmation that the market is going to create another higher high, or maybe break this point and then continue going up. But before it breaks this point, of course, it has an area to hit, which is this. It could create a double top and then drop back down, right? But at this point, what I want to do is, let's say if it's going to sell. So I'm going to play it for you guys. So check this out. So the market is going to play, and I'm going to, this is called back testing. Of course, if you have the package, what's it called? The upgraded package, you can actually use that. Just a button right there. But look what happened here, guys. Check this out. This is beautiful right here. So we got a retest, but it actually respected. The market closed above. So many people will be like, oh, so it's going to buy. Let's get in. So a lot of people will buy, but it will end up actually faking, and then it will drop more, because this is not a candle confirmation. I don't see an engulfing bullish candle. I don't see a doji or an inverse hammer, whatever it is. No, this is just a single candle that closed there just because it respected that area. And then after that, look what happened. The second candle closed at that area as well. So a lot of people will be like, okay, this is my confirmation. 2 candles closed at that support level. So that means that support level is strong and I gotta get into a buy. But there's no candle confirmation at all at this point as well. So what I want to do is wait for the third candle and actually show me what's going to happen in the market. So the market is a story, guys. Let it tell you the story and then wait for your, I would say, the reaction. Like, wait, be patient, let it tell you the story, and then boom, you get in, okay? So check this out. So now we play it and see what happens. Boom, boom. So this is our breakout candle, guys, right there. You see how this candle broke below that support line, right? This is our key candle right there. This is my sell entry. Okay, so what I will need to do is, if that happened, I will need to go to the 1 hour time frame and then wait for that retest to happen, because my entries are always based on the 1 hour time frame if you're a day trader. Okay, so reverse candles key. Yes, for sure, I was correct. Reversal. Yes, you are. Reversals, yep. Okay, so now we wait for the retest. The retest happened on the 1 hour time frame, and then this is exactly where I enter, guys. This is my entry right here. Boom, I sell. Listen, this is my confirmation. There's no reason for you to back up or even actually be scared to enter the market. If you got this solid confirmation, no retest, no entry. This is a rule, guys. No retest, no entry. Write this down on your notes, because this is the most important thing to remember. If the market never retested a certain level that it broke, then it will eventually retest it later. Just wait for that right retest, and then you enter exactly then, okay? So the market after that, it dropped. So let's go back to the 4 hour. Check this out. The 4 hour ended up retesting again with that candle. But check this out. So now I'm gonna let it play. So retested twice. This is the retest. That's the third time, fourth, fifth. You could have entered literally almost 7 times right there at that position and secured multiple lot size because it retested multiple times. You see how many times it retested it? So this is your confirmation right there. This is a solid resistance, guys. Solid resistance. So if you saw this and actually this happened in front of you, then what's gonna click in your mind if you're good with patterns, right? This is actually a head and shoulders pattern. So if I extend this right here and I pull this back, boom, this is a head and shoulders. So now I actually have multiple confirmations why I should sell GBP JPY. First of all, it respected 8 times at that resistance line. I could have entered 8 times at multiple lot sizes, different lot sizes, okay? And then after that, when actually the market came down to this area, and then here, where it actually broke the neckline, I'm gonna show you guys. The neckline was broken with this candle right here, okay? So if the head and shoulder neckline is broken, that means that the market is gonna continue selling all the way down there. So now what we do, if you didn't enter over here, no problem. I got an entry for you guys. So we can actually enter. If we go on the 1 hour, this is our retest right here. Sorry, who's talking?
Hey,
I gotta mute.
Mo, you gotta mute him. You're the host. If you could just mute all.
Oh, my bad, my bad. Okay, let me see.
I was messaging him for like 10 minutes. He wouldn't mute himself.
Okay, mute all. That's what I just did. Mute all. Yes. All right, sorry about that, guys. All right, so as you guys can see, that's the retest. That's where it happened. So this is another entry that I could have actually got in because it broke the neckline and I could have entered exactly here or right here. No retest, no entry. So imagine right now if you're trading GBP JPY from the beginning, you have multiple entries here and you have another 3 entries around this area because it broke the neckline. So this is another confirmation. So now I'm almost like 10 lots deep on this. Deep, guys. I had literally my lot size on this trade, guys, was 5 lots. 5 lots in the beginning right here. Imagine how much money that is. It dropped. I took profit early. I took profit exactly right there when it retested. It was 133 pips. And then after that, I wanted to re-enter after it breaks. So I re-entered another time and it took multiple pips again. But check this out. So now we go back to the 4 hour. Look at this beauty right there, how it falls. So now it's just going to keep going down. Look at this. Now you got another entry there. And now it's just dropping more. Okay. So guys, always wait for the market to give you what you want. And look at this. Remember when I told you guys don't enter before it retests? What happened right here? Because these are all small entries, so small retests from the lower time frames, right? So in the lower time frame, if you're actually looking at the 1 hour, it already retested in the 1 hour, but it actually never retested on the 4 hour market. So the 4 hour just gave you the retest that you're looking for right here. Boom. Exactly at that level of where we entered in the beginning. So you guys could have waited for this to happen, secured another lot size there, and then boom, smack the markets again. Okay. So that's basically how you actually read the markets, guys, based on technical analysis. All I showed you guys is literally naked Forex. No indicators. Nothing is used right now. Only technical analysis, patterns, trend lines. We got candlesticks, which is the most important thing, reading candlesticks. And then, of course, no retest, no entry. Guys, even get a shirt, get a paper in front of you. Just say no retest, no entry. Never enter without a retest, guys. So that's why another retest happened right there. And the market now is basically playing around this area. Okay, so as you guys can see. So now at this point, all we gotta do is still in a downtrend market because it's creating lower lows, lower highs, right? So at this point, then that's pretty much it. That's pretty much it, guys. You just gotta wait for it to break that level, retest, and then drop more. Or break this level. If it's gonna buy right here, retest, and then go up. But that's pretty much it, guys. I don't want to take so much time from you guys. That's pretty much it. How I trade, very simple, straight to the point. I don't do a lot of crazy stuff. You make it simple. That's how you're gonna make a lot of money. And remember, guys, the most important thing that you guys need to know is you need to avoid greed. You need to avoid emotions. You need to be not scared, because scared money don't make no money. If you actually invested $100, this $100 you're willing to risk. If you lose it, it's not gonna affect you, in your pockets financially, because you're willing to risk that $100. So remember, always risk whatever you can actually afford to risk, right? So if you're able to do that, your mindset is going to be always clear of emotions. And the most important thing, of course, is the risk management. And this is the last thing I'm about to say. I'm about to give it to Darren right now. Guys, it's not the company, it's not the course, it's not literally the signals that you get. It's always about you. The company can give you the vehicle to travel where you want to go. It can give you all the, I would say, the money, the bonuses on the way, right? But if you're not there 100%, if you're not disciplined, if you're not consistent about actually learning how to trade, because we've all went through 4 years of college and we all put so much time into it to learn. And for what? At the end of the day, some people are not using this degree, but you guys put so much effort into it. Put so much effort into this, and then trust me, you're gonna make 6 figures or even more, guys. So focus on your goals. Set a system to trade based on, and you're gonna win. You're gonna win big. It's not a rich quick process. This is not a marathon, right? So this is not like a race. It's a marathon, guys. You gotta sweep step by step. Take steps to actually elevate in the process. But that's pretty much it, guys. Thank you so much for having me on the call, Darren. I hope you guys enjoyed the value, but that's pretty much it. Thank you so much and have a good night.
Right on. Appreciate you guys. Thank you, Mo. Thank you, Christine, and everyone who tuned in. All 48 people. Appreciate you guys a lot for taking time out of your day and tuning in for the entire call. So right now, for everyone who's still on, drop your Cash App in the comments. I'm going to Cash App a couple of people $20 at random. I'll put them in the name spinner. And I'm going to stop the recording actually and probably edit the last of this out.